Hello, this is Caroline Bell with an update from Summerhill Financial Services. Well, firstly, just to finish off the calendar year anyway, there's been some new legislation passed in relation to superannuation and homes. So in the budget this year, there were two announcements that were made, and both of those have now been passed. The first one is for first home buyers. You can now put up to a total of $30,000 into your superannuation fund, limited to $15,000 per year, and then that money is then available for purchasing a first home. So the benefit of that, of course, is if you're on a higher tax bracket, it lets you accumulate any interest and investment income on that money that you're saving for a new home in your superannuation fund at a lower tax rate. On the flip side, the legislation has also been passed for anyone downsizing their home and putting the money into superannuation from the sale of their home if they're buying something smaller. Now, this isn't available until 1 July next year, so another sort of 6 months away, and it's limited to $300,000 per person, and you must have lived in your home for 10 years. Now, as always, we'll be discussing both of these planning strategies if they're relevant in your planning meeting. Now, some of you may be aware that we're still sitting on higher than average cash balances at the moment. We're investing some monies, but just being a little bit more cautious at the moment. And particularly as we come into the end of December. So distributions will be paid on the 31st of December with an effective date, although they're not actually physically paid until 3 weeks later in January. So that has two implications. First is we will wait for after the distributions have been paid, which generally results in a lower unit price before making any additional investments at this stage. Also gives us a little bit more cash to reduce any transaction costs if there are any. But also don't forget there's a period if you are looking at your investment balances during that 3-week period, the balance will be lower because the unit price is lower but the cash hasn't physically been paid into the account. This happens every January and every July. In relation to markets, they're certainly not as cheap as what they were 12 months ago. Australia and Europe is still considered to be fair value, so sort of not rushing in, but still available to invest. It's the US that's just a bit of the outlier that's just a whisker away from being overpriced at the moment. And lastly, one of the things that Margaret, Alex and I are thinking about is stopping doing the blog posts on the website and just doing some updates every now and again on the Facebook page that Summerhill has. Interested in anyone's feedback, if you find the blog posts of interest and would still like to see the blog posts on the website rather than updates on the Facebook page, if you could let any of us know, that would be great. From all of us, so from Alex, Margaret and I, we wish you a very, very happy Christmas, a relaxing break, hopefully if you're taking one, and a fantastic 2018, and looking forward to working with you next year. As always, any comments or queries, please let me know. Bye-bye.